balance, compare to balance sheet to get your profit. It happens, you can use it to get your profit at the end of the day if you are not given net profit or any other information regards to getting your statement of profit. So fixed assets, that of 98, 31st December 1998. So now here we have furniture and fittings. Now we have the furniture and fitting. Here we are going to do some workings, and the workings that you are to do is in the closing balance of furniture and fittings. We have 1,000 naira. And don't forget, in additional information, we are told to allow 15% depreciation on furniture and fittings. So let's do the workings. Furniture and fittings. That one is 15%. So you see that depreciation for this is 150. So now the real depreciation here is 1,000. The real cost is 1,000, but because we are asked to charge depreciation in the additional information, so we less depreciation, which is 150. So here you have 850 now. So that is the balance at the end of the day. Now we have a motor. We also have a motor van. We also have additional information for motor van, which is we have a depreciation of 20%. We have to charge depreciation on 20% depreciation on the motor van. So this is the depreciation. What we will now do is that the balance is 20% of motor van. So 20 divided by this, that is 5. So what we will now do is you less or better still, you can do it 20% times 18, 1,800. So then after that, this will be 360 naira. So 360 at the end of the day. So the cost of motor van is 180, 1,800. Then less depreciation, which is 360. At the end of the day, you have 140,000. So, and I told you anything that has to do with closing, when there is additional information, it is the closing balance sheet that you adjust for, not this opening statement of affairs. So, what next? We have current asset. Under it, we have cash. We have cash of 845. We have stocks, which is 1,200. We have debtors, and don't forget there is an adjustment for debtors again, and the adjustment is to write off bad debt of 300. To write bad debt of 300. So what you do is that you less bad debt here. You just write debtor. Debtor is 4,900. Then less bad debt. That means you less bad debt from the debtor. So you have and that is 300. So the remaining balance the remaining debtor balance you have is 4,600. So of which you bring it down here. So you see that the additional information justice has been done on that. So then we now prepare. Then there are another items, bill receivable, which is 1,600. If you add it together, you have 5,000, 20,003, 535. Now we want to ascertain our closing capital. But before that, let's quickly do that of current liability. We have a bank overdraft. Which is 700. We have a creditors, which is 42, and we have a bill payable, that of December 1998. $1,100. So let's less the total asset from the current liability. You have the closing balance, closing capital of 8235. So that is the step 2. That is how you prepare the step 2. Then, having prepared the step 2, the step 3 said prepare the statement of profit, and you can derive your statement. You can ascertain the statement of profit from the statement of affairs and the statement of opening statement of affairs and the closing statement. This is the opening statement, this is the closing statement. So the difference therein will give us the statement. So we can derive it from the opening capital and closing balance, closing capital here, which has been given in the statement of affairs. But before we prepare statement of profit, let me do adjustment. Let's put adjustment for drawings. You know, we have a card in the additional information because we need the information of drawings. Because if you see the format of statement, you see that drawings also have to be considered. So the card drawings, we are given card drawing of 25880. Then we also have good drawings. So both the card drawings and the good drawings, they are what we call total drawings at the end of the day. You can be given card drawings only, and you may not be given good drawings. But in case you are given 2 drawings, which is good and card, then you add the 2 together. So this is a 27. So now let's prepare a statement of profit. So 3, statement of profit as at 31st December 1998. Now, don't forget that the statement format of the statement of profit, which says closing capital, and our closing capital is 82 is our closing capital. So you had it from drawings, which is 27, because we want to get our profit. So 10,935. Then let's opening capital. Opening capital is 6285. Don't forget these are opening capital. So at the end of the day, you get your net profit at the end of the day. So you can see that the difference between the 2 balance sheets, we can help you in arriving at net profit at the end of the day. And it happens when you compare 2 balance sheet of this year balance sheet of last year, if you compare it together, you see that your financial position will change due to trading activities that have been done within a year. So you see that most things begin to change. Your capital will change, your net profit will change, your current liability will change as well. So you can use that in arriving at your net profits, of which we did here. Now, what we now do here is that we now prepare the real balance sheet. The real balance sheet, the one that we need, that we must. So let's prepare the real balance sheet. So balance sheet as a 31st December 1998. So we want to prepare the real balance sheet, and we don't need to stress ourselves, since this is the closing balance sheet. It's also what we we'll extract it down and post all items here. So there is no logic, it has no logic at all. It is what represents the balance sheet, your closing balance sheet at the year. So you just want to, there is a little bit changes, you just want to effect some changes in the capital, but those items that are treated in the fixed assets and current assets will appear the same in the balance sheet. So we have furniture and fittings, which is 850. We have a motor van,